Sorry for that, folks. Welcome to Admiral Markets, the trading room today on the 3rd of December. Sorry for that delay. I'm not sure why, but we were waiting for the webinar to start. In any case, we're here, and we're going to take a look at the Forex market, and we're going to take a look at the charts in just a second, and take a look at what we can expect for December, the December month of trading. It's the last month, so with that said, of course, always the last of anything in Forex is more dangerous, just like the first hour of the session, the first day of the week, the last day of the month, so is also the last and the first month of the year. So December is always a bit more different trading, also of course primarily due to the holidays later in the month. So primarily the last 2 weeks, I would say. First of all, the risk disclaimer explaining that trading for exchange and any global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So today we're going to take a look at breakout trading. That means we're going to be defining the trend, looking for the opportunity, which is a pullback, checking if there are filters, then establishing a trigger and entry. All right, these 5 steps. Probably everyone does, but we'll be looking at them more thoroughly and step by step. And we'll be looking for breakouts specifically, which we can use is trend lines and moving averages, for example, to trade those breakouts. With that said, I'm going to go to the calendar first of all. Michal today is not going to join us. He's on a business trip. So we will go right away to the nope. I wanted to go to the Forex calendar. Good. Yesterday we had a odd interest rate announcement that stayed the same. Did have a bearish effect on the odd. Later today we have some Euro news and USD news. Nothing all too major. Later this week though, sorry. Later this week we have CAD interest rate tomorrow. We have Euro and Pound interest rate on Thursday, although I don't think the interest rate on the euro will change, but still we have some announcements probably as well. And of course tomorrow ADP and on Friday NFP for the dollar. So it is quite a busy week regarding that news events. Now, as I said regarding the risk, I don't think that the first 2 weeks of December will notice anything, but Wednesday the 18th of December we have ADP. No, sorry, we have FOMC. That week could be quiet, also because it's the week before Christmas. Christmas is pretty quiet, but usually, although you have once in a while some movement, but wouldn't count on it. And then the week after, we have the first week of New Year's. So those are pretty good weeks to do some back testing, paper trading, learning, reading, because not much will happen in those 2-3 weeks. Alrighty. Let's take a look at the euro dollar. I'll take everything off, in fact. Make it nice and simple. And let's go to the monthly. We can start with the monthly. I know that some of you are going to find it boring, but I do always look at the monthly chart when a month is finished, just to see what the high and lows are, to get a feel of the candle, for example. That itself could already be interesting information. So even though we are trading maybe, or you are trading on a 5-minute chart or 15, I don't think it doesn't hurt to take a look 1 minute to the monthly chart just for informational purposes. And we see basically a pretty big wick at the bottom to doji, but more wick at the bottom than at the top. So there was some buying pressure, as we know, but the upside was very slow and corrective, as we all know, when looking at the 1-hour and 4-hour charts. The month before we had a pretty big wick at the top, so not much movement on the euro dollar in general. If you look at the last few months, just a steady but very slow increase, right? Really almost more a range or a very shallow trend. Not much movement. So what can we look for? We have a high right around here and a low right around here. I think the low would be important for downside, because any downside could still maybe find retracement off of the support of the low. But if we break that low, we could see a fall to retest these bottoms right in here. A break of the high I think is a bit less important because we still bump into resistance of October's high and this year's high as well pretty quickly. So to the upside is quite packed with resistance. Let's go to the weekly chart. You can see a pretty strong fall as we know, and we've had 3 weeks of upside, 3 weeks of bullish candles, but that move actually stopped at 61.8. You can see all these fibs have been respected. The 38.2 price stopped at 50%, price stopped at the 618 as well. So every weekly candle stopped at a fib. Will the next one stop at 786? It's possible, or if we break last week's low, we might see the continuation of that downside momentum. Down to, for example, the minus 272 at 131.40 or 129.50 or 127.50. If we don't break last week's low but break last week's high, then I would say we have some space up to 137.15. So that's the basically the what I would think from the euro dollar in the long-term perspective is I personally am waiting for these two levels to break, but I wouldn't be surprised if we actually break to the downside. It would be my preferred direction because there's more space. Not that I necessarily want the euro dollar to go down, it really doesn't matter of course to me, but if I look at the space, I see more space to trade it from the bigger time frames to the downside than to the upside. So trading it on a lower time frame would also become easier if there's more space. Now obviously if we break above the 618, stop at the 786 and start to break like this, we'll have to break this top really to get more space. Once we break this top, then we have a few hundred pips maybe to 140 and 143. So I hope that makes sense. Let me open the question box in fact, just in case you had a question. Good, no questions so far. If you do have a question, by all means let me know. No problem, of course. Or if you have a comment as well. So this is the daily chart. When we look at the moving averages, we can see prices above them for the most part, but in its entirety, just as the monthly was saying, quite choppy. Yesterday was quite a bearish day as well, right in here. And a pretty big fall after hitting this 61.8, as we were mentioning yesterday as well, last week, sorry, that these fib levels are the target. You can see why, because it hit the 61.8, hesitated, and then boom, fall. That's what happens with these fibs. So we're going to look for breakout trades, but I want to first establish the trend definition. Step one is defining the trend. So that's what I'm trying to do. We can put trend lines on the chart, absolutely. Good observation, Ralph. We can do something like this, for example. We'll be cutting through a bit of price, but that's okay. I think it should be acceptable. Although it's preferably we would like to have everything in it, but sometimes price isn't that neat. You can see that price is also below our moving averages. So if we break through the trend line, that could be a continuation breakout to the downside. Now from the weekly perspective, we said we want to break below last week's low. But from this 4-hour perspective, we can see that that level might not even be needed before turning bearish, because we have a channel, we have moving averages pointed down, prices below it. If we break through this level, that would probably already signal the fall. This correction has been taking forever and has been quite choppy. The only thing that went fast is this downside and the subsequent upside, in fact. Otherwise, everything was quite slow. So down to the 1 hour. And upside, I really wouldn't be interested in upside unless we break above this trend line, and downside below this trend line. Any upside here could see retracement for this, or just continue in this zone. So not too interested in trading it here to any direction. Personally, it wouldn't make sense to me. I do see, what I see is a big fall here. I don't want to go long against that because that could indicate the potential to fall again. Nor do I necessarily don't want to go short here because we are bouncing off the bottom of a trend channel potentially. So I'm neutral in this area, personally. Moving averages on the 1 hour chart still look pointed to the downside. Let's take a look at the 15-minute. We are getting some retracement to the upside now, as you can see. We'll have to see how price responds when it pushes up. If we get a bull flag, maybe something like that, it could be worth taking to the upside. But at the moment, you can see the moving averages are pointed down and price is going up on the 15. That just shows that basically price is not trending up. If anything, it's trending down at the moment, but price is moving up. What that means is that it's moving against the trend on the 15-minute. So that's why, in my opinion, it doesn't make sense to trade it either way. Let's get these things lined up first. Then we'll be trading with the trend, which are far better breakout trades than trading breakouts against the trend, which is pretty difficult to trade. You really have to know when to do that. Let's see. I got some questions about the euro dollar. Salim is asking on weekly chart. Not sure what you mean with. I don't exactly remember what I said when you wrote that. WIFO, would the previous range bottom be a good place to sell at 135.80? Yes, that could be a good one indeed. I wouldn't necessarily put an entry order there personally, although I'm not saying that there's anything wrong with that necessarily. But I would somehow wait for more confirmation due to the fact that the euro dollar, although it is moving slowly to the upside, it is still an uptrend channel. And I don't like shorting, I don't like placing direct entry levels in an uptrend like that. I still think it's too early and too risky for that because of that trend channel. That's why. But if we see some confirmation, like a good 1 hour wick or 4 hour wick, then it would make more sense to me. Or it's better, less risky, let me say it this way. Alrighty. So great questions there. Let me know what you mean with Salim. I'm not sure. We could take a look on a weekly chart, but I'm not sure what you want to see on the weekly. So far, we've had a drop. So I guess that's it from my side. What I specifically would want to see for downside break is a move down, a pause, and then a break. And then I would take it upon the break of the 15-minute fractal and put a stop loss above this band. Okay, so let's keep an eye on it. Pound dollar. Monthly. Well, November saw a big push through the resistance at 162.50 and 163.13. So that was a pretty interesting development. Not necessarily does this have to be therefore a bullish triangle, right? It still could be a bearish triangle, although we are breaking through it, as you can see. The bearish triangles, excuse me, the bearish triangle would be out of play when we break above 167.50, because when we break that top, then this is not a wave C anymore, and we're not in a wave E anymore. We could still be in E for downside. Who knows? I mean, this thing is taking ages to play out, so let's see how this goes. But 167.50 is any case of resistance that we have to be aware of. The price could move up to retest that level on the monthly chart perspective. So an interesting break to the upside. Let's take a look at the weekly, and we can see that we've had an impulse here, and the currency had a reason to move down from here because it was at resistance, major resistance in fact. It didn't do so though. It chose to break, and what we got was a big bull flag in fact. And if we put a fib on this upside here, we got a breakout on the weekly chart to the upside. Now, the theme of today is breakout trading, but of course I'm not trading breakouts necessarily here on the weekly or monthly chart, but it is a breakout to the upside what we're having now. So there is pound strength against the dollar, but also we will notice as we scan the charts that pound is relatively strong against all currencies. Obviously against the yen, because there's yen weakness, but also against the euro, also against the AUD, even against the New Zealand, so even against the CAD. So there's a lot of relatively, pound has been relatively the strongest so far. In any case, we see that the 23.6% retracement has been hit. What is the target? The minus 272. Where is the minus 272? At 166.43. So there could be some space still to continue for the pound. Now we've broken the level, this trend line. We never got a retrace. So a move back to the broken trend line and bounce up to minus 272 wouldn't be strange. Obviously, it could still move up in one shot before it makes a retracement, right? We have to be on guard for both. Strong bullish weekly candles, third in a row, in fact, last week. Let's go to the daily. Yesterday had a bit of a pin bar after a substantial run up. You can see what do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days up. So a pin bar after 13 days might indeed be a pretty decent price action signal. I'm still careful because it is an uptrend, and I don't necessarily think that this pin bar will be a total reversal. Why? Why do I think this pin bar is not a reversal? Because I think the currency will go to target at 166.60, or get close to it at least. And it still has a pretty decent way to go before getting relatively close to that target. So all I think that this pin bar could do is provide and aid the pound to make the retracement back to support and then a bounce again. That's something that pin bar could create. So logically, that high, yesterday's high, and actually I would say anything 12 pips above that high, in fact, is relatively, yes, we are in uptrend, but we see some indication that anything in this area could be resistance for that retracement. So yes, we are in an uptrend, but if we look at the filters, we see some reason to be concerned with that trend at the moment. But if we get the pullback, then we would like to trend again. And if we put a fib on this upside, anything like a 382 or 50 at 162.17 and 161.50, would be interesting levels for that continuation. We then go to the 4-hour. You can see the breakout here so far on the 4-hour chart. Price well above our moving averages. Let me get rid of this one. Price also very nicely above the 1-hour band. And now back above the band. So I would be careful. I wouldn't necessarily want to short in here because you can see price is still way above the bands. I'm not personally not a trader. This is a breakout session anyhow, so we shouldn't be. I mean, I don't want to focus on these reversal trades in any case. Personally, it wouldn't fit in the well, it wouldn't fit in the session. Let me say it this way. Plus, I'm not a big reversal trader anyhow. So, but as we know from the daily perspective, this upside is running the risk of moving back, for example, to these levels. So let's see. If we go to the 50-minute chart, we could be breaking out as we speak, in fact, if we were to use a trend line like this, for example. So there's nothing wrong with that. It actually, the breakout trade could do pretty decent. But because of the long-term analysis, I do have some doubts it will make a very big run or a very big substantial breakout trade. So yes, it is a breakout trade, but there is reason to believe resistance would block the development substantially. Plus, I don't like to pound that much in the early morning, but with that said, it is we are pushing through the 50-minute fractal above this trend line. The only thing is that the stop loss would have to definitely be at least below here, below these moving averages. If one were to take it, but it's about 30 pips. Well, you never know. Sometimes these things break through resistance and keep pushing. Other times they push up, find resistance, and fall. So let's see. I'll keep an eye on it. Maybe there's something else that is breaking out as we speak. All right. Let's go to the AUD USD, and then we'll go to the dollar yen. And then we'll take a look at some crosses of the yen and AUD with the euro and pound. The euro yen and pound yen are going into levels that haven't been seen in 5 years. So very big trends on all these yen and AUD crosses with the euro and pound, but also with the dollar. Alrighty. AUD USD monthly charts. Bearish monthly, November, after a pretty big wick on October, and price is now underneath the moving averages instead of above it. So there is a bit of a paradigm shift there, and if we put a fib from the top to bottom, obviously most of you know that we've stopped at the 50% Fibonacci retracement level, which means that the target is minus 0272 and minus 0618. Primarily at first, though, the minus 0272 at 83.55. Now, we won't fall in one shot. We won't fall without any ups and downs. As we know, everything moves in these waves, right? These natural ups and downs. Even if you don't count waves, you don't necessarily have to count waves to know that price doesn't go normally in one straight fall. It always makes some ups, some downs, some ups and downs, right? So why does it do that? Because it's respecting support and resistance, and one of those support levels is the bottom, of course, here at 88.30. So we should be aware of that. So bearish, dollar looking strong against the Aussie. Better, even stronger than the euro, of course, and definitely stronger than against the pound. If you compare those, euro dollar, pound dollar, and odd dollar, euro dollar was moving up, but was correctively moving up. Pound dollar actually was making a bull flag and broke to the upside, and odd dollar has just been moving down in a downtrend so far. So interesting differences, right? Pound dollar making a bull flag and breaking to the upside, euro dollar making a fall to the downside and correcting up, and odd just falling. So that shows you also why the pound odd, for example, has been moving up so much, which we'll be looking at very soon from now. So the odd USD, yet another bearish week, but a very smaller sized weekly bearish candle. But still bearish. The oscillator has turned here as well to the downside. But you can see the fall has lasted already several weeks, and we're getting close to support. I'm not saying the odd could not fall just a few more pips, but eventually one might expect a bit of a retrace up before continuing down. Whether that will happen here or lower, we'll have to zoom into lower time frames, but I think lower might be likely. Let's take a look at the daily. You can see lower lows and lower highs, and the band here of the daily pointed to the downside, a good angle to the downside. We could even probably put a trend channel, in fact, on the 4-hour chart here maybe is the best for this downside. Connect these, roughly these tops and these bottoms here. Something like this could be a potential channel. And the price has been underneath the band very nicely. We had good breakout trades here and here. This is a bit choppier. If we put a fib on these downsides, of which the latest one is this one, we have a bullish price action signal right at the bottom now, which could indicate a potential support, maybe a triple bottom, for a retracement up to the 382 maybe the 50, maybe the 618, which are all resistances. The 618 is resistance because at the top of the trend channel plus the long-term moving averages. The 50% fib is equal to this bottom. The 382 is equal to this resistance. All three fibs have reasons to be considered bearish. For those of you who are wondering, this is odd USD 4-hour chart that I'm looking at. So I'm definitely bearish looking at this at least until the bottom at 88.30, and we still have space. And you can see that when we look at the targets of this 4-hour fib, that the minus 272 is at 89.45 and minus 618 is at 88.10. Very close to the bottom, just below the bottom. I therefore would really like to see some confirmation at these fibs, and I would gladly try to take it a short. at any of these three fibs, depending where the price action signal would confirm the turnaround. Now, how about if we don't retrace up to those levels? It's possible we might fall immediately, in fact. You never know, so we have to look at that as well. Let's take a look. We do have a bullish price action signal, so there is a decent chance of moving up, but it might move up here and then fall again. So how to tackle any downside continuation, I think we have to look at the 1 hour chart even. Yeah, the only way probably I would trade it is by looking at the 1 hour chart. I would really want to take it only if there's a angle to the 1 hour band here, then zoom into the 15 and take the next 15-minute fractal break that is below the band as well. That's probably the safest way of doing it, because otherwise this is looking on the 1 hour chart quite choppy. Yes, the trend is down, but recently stalled, so probably even a break of this bottom is needed eventually to really be able to trade it. In this case, the band is pointed to the downside, so let's take a look at the 15. As you can see, the 15 price is also trending down. The trend is down, but price is moving up on this odd USD 15. So for me to trade this odd USD, to trade a breakout to the downside, I would need price to fall here, go sideways for 30 minutes, and then fall again, or even break below these levels, one of the two. Otherwise, at the moment, price is retracing against the trend. So I needed to break back into the downtrend and break out of it, or, as I said, wait for bigger hookbacks to 92, 92.50, or 93. So one of those two scenarios would have to happen for me to get interested in this odd USD trade, because upside is obviously not with the trend. Upside is not a breakout trade. Upside is a retracement. So it's a different environment there. Let's take a look at dollar yen. Dollar yen. We actually took a trade live together, right? And it was somewhere. Let me take a look. Let me take a look at the 1 hour chart. I think that was here. Sorry. No, it was the 27th, sorry. No, that was here, wasn't it? Yeah, that was here. So that worked well. From 101.60, I believe, 101.64 maybe, and I closed it. I said I would trail stop the 50-minute world. If you did that, you would have gotten out at 102 by 5 pips. You would have gotten out at 102.09, which is about 45 pips, I think. I missed this particular fractals. I had it still at break even, so I survived this pullback and eventually got out taken here somewhere and closed it before the weekend. After the weekend, though, we did continue even higher. So in any case, that was that trade. Let's take a look at what's happening now. Last month, November, was a very, very, very big bullish candle with a close very near the high. So no, I mean, the bulls remained in full control throughout the entire month up to the very last minute of November, and very bullish price action candlestick signal. We had a couple of months of indecision, as we all know, 5 months here. That came after a tremendous upside, and I wouldn't be surprised to see this continuation to the upside, as we've been already discussing in previous webinars. So with that said, upside triangle, a good breakout of the triangle, because let's face it, that monthly candle is an awesome breakout candle. It's a sustainable breakout candle and doesn't look to be like a false breakout candle. One thing I do want to say is that I would like to see the high, this year's high, and the top right here at 103.70 to be broken this month for a real confirmation of a breakout to the upside. If we don't break that this month, then I would say the likelihood maybe of this indeed still falling back to 90.91 before we push up is increasing. But at the moment, I wouldn't say that is likely. At the moment, I would say this is a bullish breakout of the triangle and doesn't look like a false breakout. And if we push above 103.70, then that should be the confirmation of that analysis that we've been already discussing for so long, that this could happen on the yen. If that does happen on the yen, the breakout to the upside, then we could put a fib on this impulsive uptrend of earlier this year and even later last year. And we can see the currency hit the 38.2, and the target would be the 111 at the minus 272. And later on, maybe even the minus 618 at 120. So very interesting. Before we get all too bullish though, we are right in front of a major resistance. 103.70 is a major resistance, and price is right in front of that. So we still have to be careful. That could cause the currency to at least pause, if not even retrace a bit. And who knows, if we don't break it this month, the top maybe even reverse back to the 90.50, this 50 fib. All right, because we stopped at the 382. If we don't break this top, then the next fib is the 50. That's how the currency works. So we've had 1, 2, 3, 4, 5 weeks of upside. I don't think this will not break. The only thing I'm saying is that we want to be careful not to go long right in front of it. We don't want to go long right in front of resistance. That's all. We do it rather just a bit lower when there's still some space at least to resistance or support, for that matter. Price is above the band on the weekly. Let's move over to the day chart. Oh, one thing about the weekly, by the way, the oscillator is back to the zero line, and we've broken the last weekly resistance already a while ago, indicating that the oscillator has said this upside, that had a tremendous big oscillator reading. This correction has brought that oscillator from that very high push all the way back to the zero line. And for those of you who have listened to the oscillator webinar, you know that once the AO is back to the zero line after a push up like this or down, and the oscillator has a very high reading, that is a strong likelihood that the retracement is finished, completed. So that's an important signal on the weekly. Down to the dollar-yen daily chart. And for those of you who followed my wave analysis, you know that in here I was waiting for the wave E finish. That happened here at the blue box, or how do you call it, the square. And you know that I've been looking for wave 1s, 2s ever since. And that's exactly what's happening. And we are getting the bullish continuation of a wave 3. So the wave count was spot on. if I may say so myself, and it's indeed behaving as expected. The next barrier, as I said, is the last one that needs to be cracked and broken before we get a full confirmation of that, because it's still not fully confirmed. Let me put on those wedge lines like this. Good angle to the band, indicating a strong trend on the daily. Four-hour chart 2, rocket to the upside here. We jumped on that rocket about here on Wednesday's trading room, where I have the green dash. Price is above the band here too, very, very impulsive. One-hour chart, really nothing different, just showing how all these corrections have given opportunities to join those breakout trades. And well, if there are any examples of good breakout trades, then those are right here on this chart. Those were great breakout trades on the dollar yen to the upside, of which I took one last week with you in this room, of course, as you already know. But that is a breakout trade. Just in case you don't know, that was a breakout trade. Do we have a breakout trade right now, right here? Is maybe a question that pops on your mind. And not really. Why is that so? Because we really don't have at the moment a particular chart pattern on this 1-hour chart. If you look at my green lines, we see bull flags and some kind of wedges. Do we have that right here? And the answer is no, not really. Price is continuously moving and it's not pausing at the moment. So no, we don't have a chart pattern at the moment. That does not necessarily mean we don't have a breakout trade though. We just don't have a breakout of a chart pattern or a trend line. We can still look at moving averages for breakout, and moving averages are definitely pointed up. So if we then zoom to the 50-minute world, what we'll be looking for is probably a breakout above these levels here for a breakout trade. Right? You can see something like similar to, for example, a breakout above this level. We got this trade. Even a breakout above this level. We got not much movement, but some. A breakout here, some small continuation. A breakout here, small continuation. Not all these breakouts, if you use the 50-minute chart, are going to be that far or go that far. That's just the fact of life. Sometimes, though, they are big runners, and those big runs give normally very good R2Rs. Those smaller runs could give a break even, a small loss, or a small win. But those things happen with the 50-minute chart. Still, in all, if you take all of them, it adds up quickly. But you need a trending environment, though. Let me warn you, this is not with extra emphasis on trending, especially on the 1-hour chart, because otherwise it would be not good to trade these breakouts, or the profitability would the profitability, how do you say, the balance of profitability might be totally different, right? If we're, for example, in a range on the 1-hour chart, taking breakouts might be taking a trade right at the bottoms and tops. That wouldn't be good, because we then know that, of course, price could be changing gears at any moment, right? But I think most of you know that. I got a question from Salim why I think 103.70 is a major resistance. And the answer to that, maybe someone already knows for the fun of it. Anyone want to make a guess? That was just an excuse for me to drink a sip of water in the meantime. So then I have a bit of time to, because my throat was a bit dry. Yes, indeed. WAFO has the correct answer indeed. It is because it's the most recent high this year, and it's a top. Those levels, those major daily tops and weekly bottoms, and daily bottoms, those are always support and resistance where price not necessarily will break through it in one go. I'm not saying price cannot break through it, but this breaking in one shot statistically is not that likely. We're difficult. I mean, it does happen once in a while, but I wouldn't plan on it, let me say it this way. And the likelihood of price respecting that level and making a small or maybe even a somewhat bigger correction before being able to break is more likely. So that's why it's a major resistance. So I think that's it. From my perspective, I would need a breakout above 103.30 to be able to trade this dollar yen, 103.31. You might wonder why, because 103.70 is pretty close by, so there's only 40 pips above 103.30, but 40 pips on a 15-minute world is not bad, and could be enough, but we would need to check, or I would check what the risk is though indeed when placing the stop loss below below the band, for example, this moving average band. If that is more than 40, then I would skip it. If it's around 20, 30, it would be okay. At the moment, price is here too, as we can see, unfortunately moving in the opposite direction of what is the trend on this 15-minute world. If you have any doubt what the trend is, you can see prices above the moving averages. And we see a fall here, so they're opposite of each other. I think indeed, Salim, indeed, a break of 103.31 would have a pretty decent chance the price can approach 103.70, but it doesn't have to hit it exactly. It could stall at 103.60, for example. So what I would do is put a TP at 103, maybe 68, but also trail stop. Yeah, sure. I thought you understand, but just wanted to make sure that everyone's on board. And I would trail stop it. I would just trail stop these 50-minute fractals so that I reduce the risk. You can see that, for example, this breakout trade, if we trail stop the 50-minute fractal with 5 by 5 pips, we exit in the ideal place. Is that the best trail stop in the whole world? I'm not sure, but it works well enough for me to use it. I think it keeps a trader in most cases in the biggest part of the impulse. So that's what I would do on the dollar yen too. Therefore, also, if it, for example, stops at 103.50, because there is that risk that it goes up 20 pips, then because it's so close to daily resistance, what can you do? It doesn't go further than 103.50, for example, and then falls again. And I want to reduce that risk. Because this, relatively speaking, this is probably a more riskier breakout than the ones before that, because we are close to that resistance. So if you want to skip that one, it makes sense too, in that way. But you never know. We could break through the 103.70, and then, so it depends how you look at it, I guess. But maybe with a small risk, I don't know, that maybe reduce the risks by 50% of the normal risk, or even 75 if you want, and trail stop it. I use, on a 50-minute world, 5 pips behind the fractals in breakout situations. In breakout scenarios, I use 5 pips behind the fractal. And 5 pips usually works pretty well because sometimes a fractal gets broken by 1 or 2 pips, even 4. 5 usually does the trick in a pretty good number of cases. So that's the dollar yen. Let's move on to maybe the Kiwi. Wafo is talking about potential 1-hour breakout on the New Zealand. So let's take a look. This is the 1-hour chart. It does look like a breakout. I agree. The only thing is that the moving averages are quite flat at the moment. I would want to see this hourly candle really close, personally. And it has to do with the moving averages being flat. If the moving averages are flat, like this, sometimes price breaks out of it, but actually it's just a ranging environment, breaks out, slams into resistance, and then moves down again, and you get a big wick at the top. If we have a good close, the moving averages will start to point up, and that could indicate the sustainable breakout. I would want to see this close at the top of the hour. If it does close bullish like this, then I would wait for small retracement on 15 and take the next break above the 15-minute fractal. So I know that's maybe, we might be a bit later to the party, but then again, the advantage of doing this is that we avoid a potential breakout that doesn't go all too far, in a way. So it depends, of course. That's how I look at it, at least. It is breaking to the upside. It's just that I, in honesty, don't like this flatness here. Also, price was pretty strongly going down here. Let me take a look at the 4-hour chart. Quite choppy price action. Four hours flat as well. Was moving down. Now hit a spike up. It's, yeah, to me it's too choppy because of that. So I'm a bit cautious with this one. Let's see if there's anything else, but it's something to keep an eye on. We can take a look at the top of the hour again. And Vigantas is saying there's a gap as well down below. That was this last weekend, in fact. Thank you, Vigantas. I didn't see that, in fact, so good to know. Gaps, though, personally, I'm not really one that pays a lot of attention to them, so probably someone could explain, more about them than I myself. But there's always a potential for them to be filled. I do know that if there is a gap not filled within a couple of hours, that the strength of a gap decreases slowly but surely. But let's see. Alrighty. What are we going to look at? Euro yen maybe? Pound yen first, or pound odd? Maybe the pound odd. Pound odd went to, well, let's take a look from the very scratch, from the very beginning. Very bullish candle in November. Very strong breakout to the upside of this trend line, in fact. So a lot of momentum to the upside here. How far can this go? Now that we're clearly broken above the band, we have maybe pretty good space to the upside. Let's take a look at the weekly. If we put a fib on this weekly here, we can see price stopped at minus 272. Now the next target, the minus 618 at 184.40. Down to the daily. You see that shallow retracement here looking like a bull flag, and we were talking about the potential break here, and it did, and that was a good break, big break in fact. This break though will not last forever. Could it reach the target before retracing? Possibly it could. The trend is very strong. Then again, we would personally wouldn't mind to see if it retraces back to the broken trend line for a bounce. The oscillator is very strong, so any retracement of such magnitude would see a continuation to the upside though. Alrighty, so that would be a good support level, anywhere back to these broken tops, of course. Let's see, how about the 4 hour? 4 hour was just moving crazily to the upside here. Very, very impulsive. And I'm not even sure if we will make that retracement right now. We could just go sideways and break one more upside before we make a potential retracement. That's how strong this move is. So let's take a look at that. 1 hour charts. Looks like we're breaking out of consolidation. Looks like we broke out of consolidation and now hooking back. So maybe this hook back is a potential bouncing spot for more. Let's take a look at the 15 now. Here too, price has a trend, but price is moving into the opposite direction. It's a bit of the main story today. Nothing we can do about it. All the currencies are set up very similar in this regard. And yeah, that's just unlucky. What can we do? But for me to trade this breakout, I would want to see a move back up, preferably either break this top or a move up, small flag or chart pattern in the next break. So same story here. No chart pattern because it's, well, we had a chart pattern that was broken recently. So this could be support, but it wouldn't be a breakout trade. The breakout trade was, let's take a look, was here. The only thing is that the breakout trade really didn't go too far. But if we trail stop it by 5 pips, we could have exited here, so no loss, small profit. This could be a pullback, but the breakout trade is when we actually move to the upside. Let's take a look at something else. Personally, I wouldn't be surprised if we do see some breakout continuations, but I would wait for that to materialize. This is still a very strong uptrend, but now we are in a bit of a consolidation, so I would want to see the breakout before trading that, of course, logically. But if we do break out, there could be a pretty good trade still to the upside. Then after this break, then we might see a bit of a deeper retracement. But the final target was, how much was it? Let me take a look. Oh, I took the fib away. not the final target, but at least the target that we could expect at minimum would be 183.70. But it could be more. Let's see. Yeah, that's, I think it actually from the pound on. Let's take a look at the euro yen. We'll mix it up a bit. Here's the euro yen. Euro yen, very bullish monthly candle as well. Big trend at the end of the month on the yen and odd in November. So euro yen nicely moving to the upside. In fact, if we zoom out, we can see that price is poking above this 138.60. Price hasn't been that high since 5 years ago. 2008 was the last time. Now that we've broken this resistance, the next resistance, in fact, or the next top, is all the way at 170. Which means there's no resistance closer by than 170. Quite amazing. That does not necessarily mean, of course, we'll fly up to 170. We will now be hunting for fib targets. So what is the next fib target? You can see if we put a fib on from here to here, that we stopped at 23.6, almost 38.2. We hit the minus 272 target and stalled. The next target, minus 618. Where is the minus 618? At 144.60. So that's the next target on the euro yen, 144.60. If we then pause and break again above 144.60, then the minus 1,000 would be the next target at 155. There are some smaller targets in between, which we primarily can find by putting a fib on this upside. Like that. Here too, more or less a bit of a confluence there between those. But the bigger fib is the most important. Yeah, I was doing it on purpose so that we can see the fib a bit better. That's why. I was moving it to the right. I think that's what you mean. But in any case, this one is the most important in my opinion. But we'll have smaller fibs, of course, along the way that will maybe create some pause for this currency. Oh, yeah, you're right. Thanks about that. Yeah, what happened with that one? Let's take a look. I know what happened. Good. Thanks for that, Jana. So I just have to, there it is. Now it's okay again. The minus 1272 is missing here. So now down to the daily. In the daily, you can see that this was, of course, a tremendous impulse, correction, continuation. This has been a pretty big correction. If anything, you see that we have had a pretty substantial consolidation zone here, although slanted to the upside. And the daily was showing something like a potential rising wedge, but it didn't actually turn into one. It actually broke the rising wedge to the upside. That can happen too sometimes. And price remained above the moving average for this entire duality, or entire zone. For our chart, acceleration of price away from the moving averages and from the channel and above the top. Ralph is asking if we can consider a break at 139.80. Yeah, there is a small break happening right now on the lower time frames. That's a good observation, Ralph. We'll take a look at that, definitely. We of course broke out of this rising wedge here, kind of got a small hook back. In any case, lots of strength here. 1 hour chart. When you have such an impulse like that, sometimes that's why breakout trades are good, because we might not even get a bigger pullback. For example, if you look at this daily chart, the swing trader might say, okay, I want to trade it from, I want price to go back to these tops. I'm not saying that price could not get there necessarily, but it might not. It might go to 144 without dropping back to 135. So not always will we get the pullback we want to get. And although pullbacks make sense, that's why breakouts have their value as well. And a swing trader or position trader that's waiting for that might not get that, because this is breaking impulsively, and it could just continue and stay above these moving averages. It might make a bit of a pause here, but then that's it, continue. And if you're waiting for this level and not taking the breakout of this bull flag, then you've missed it. So this is very impulsive. Let's take a look at the 1 hour now. Also, very good angle. This could be a good breakout trade indeed. We had some kind of chart formation here. I'm trying to read what it could be. It's kind of messy. Maybe it was like an expanding wedge, something like that. It's quite messy. It was some kind of correction though, right, in this green zone. In any case, we had a breakout here too. If you trail stop that, would have gotten out here. So the next breakout would be above here. So that's pretty close indeed. How far could it go? It's difficult to say. It's been moving a bit choppier, but it could accelerate and break up very nicely. So that would be a breakout trade. I think that's the only one that actually probably has qualified so far today. So it would make sense to focus on this one. So I'll put entry order on that. I'll just take it above. I'll trail stop it. I'm not looking necessarily for any TP at the moment, because the euro yen has space. The only thing I do notice is that, didn't see it at the moment, but it stopped at 139.94, which is pretty close to a psychological 140 number. That is a bit of an issue. I just didn't realize it now. The thing is that price could break through that level, but it is a bit of a concern. But I think I'll still, despite that, well, give it an attempt. Another option would be to wait for the break and hook back to see how and if the 140 can break. In theory, the target, the big daily target is at 144, but price will most likely not get to 144, of course, on this 50-minute chart. There'll be more ups and downs in between. Stop loss I'll put below this 15-minute fractal. The spread here is only 1.5 pips. So if you're trading and you have a bigger spread, take a look at Admiral Markets. Alrighty. Regarding the potential, that's difficult to say, Salim. All we can look at is that price is definitely well above a very steep band. That means there's a lot of impulse, and this means that things can move on and continue for a long time. If any of these breakouts we got very nice runs to the upside. This one could be the same. Where that precisely could go, we would need, all I know at the moment is that the bigger daily target is at 144. To get smaller targets, we would really need to look at the 4-hour chart, which I can do, no problem. At minimum, the 4-hour chart, maybe probably the 1-hour chart. And we'll have to put fibs on these swing highs, swing lows. 1 second, folks. Alrighty. Let's take a look. I'm taking a look at those targets and moving the fibs accordingly. On this time frame, it looks like 140.35 is a minus 618. So that could be a target. Let me check if the 1-hour, but I'm not targeting, as you know, I'm trail stopping it on this 15-minute world, but it could be the spot where it pauses. Let me say it this way. Let me take a look at the 1-hour. And I'll do the same process with these fibs. It's about the same fib at 140.40. Now, it doesn't necessarily have to stop there. It could just move up a bit, get a small bull flag, and then continue up to the 141.80, right? But that could be a level that sees some respect. If we continue after that, the next one would be 141.90. Most likely, we can put a fib on this upside. Yeah. In any case, it's all going to be about targets because there is no support and resistance. That's the thing when you break out. There's going to be no support or resistance, or I mean no resistance in this case that stops it, but there's going to be fib targets that we need to look at to know. But it's difficult to really, in a trending environment like this, I wouldn't necessarily want to predict where it could stop because if it's trending, it's all about impulse correction, impulse correction, impulse correction. And these things can actually push, because it's trending so much, can push a lot further than we might expect. I think it would be interesting, though, to take a look at where it could turn again. And if we push through, then obviously all these levels that we use as basically basis for these patterns become support in the future as well. Anytime price were to hook back, then the likelihood of this now acting as support, of course, is becoming pretty big. A level like here has that tendency to become support. A level like this, or this top right in here, or this bottom, if it can get that low. So I took it with a very small risk because it's a bit funny breakout, in my opinion, with this particular chart pattern. Also, it is close to the 140 level. Plus, this is a huge uptrend, but it's still, it's still nothing I would really want to trade with a lot of risk until I get a bit more confirmation of a continuation. So it's worth trying, but I took it with less risk than I did with the dolly in last week Wednesday. Well, let's see. I'm trail stopping it, as you know. With every 15-minute fractal, I would put the stop loss 5 pips below the 15-minute fractal. So if there's a fractal here, I would move it 5 pips below. So that's just my way of reducing the risk, and thereby minimalizing any loss. Or in some cases, if the stop loss is above the entry, then even locking in some profit. That can add up quickly. If this really breaks up quickly and nicely, then the trail stop could eventually get into a territory where I'm locking in a 1-to-1, a 2-to-1, sometimes even more. In some cases, a breakout trade like this can make a 3 to 4-to-1, 5-to-1 sometimes, but those, of course, are relatively high. So there's advantages to trail stops with breakouts, because you let the trail stop basically decide where you exit, and you let the market decide how far it wants to go. And it cuts your losses short and lets your winners run. And all of us know that if there's anything in trading that decides good outcomes, is letting our winners run and cutting our losses short. And I do like trailing stops for that. So we're getting a breakout as we speak. I'm up 3 pips at the moment, and which of course could easily become -3 in a minute. But what I do see is some thrust here. I do see some push. Let's see if we get the continuation though. How's the Kiwi looking like? I promise to look back at the Kiwi. If you have any questions, let me know, because slowly but surely we'll be rounding it up as well, wrapping it up. There is some angle to the Kiwi, I think. Yes. The black band has some angle, so that is a pretty good indication that we have a sustainable breakout. I wouldn't see why a breakout above this level wouldn't be good with a stop loss below here, below the band. That looks good. As I said, I'm looking for a 1-hour good close on the 1-hour chart, and then I want a pause, a 50-minute top here. And that's exactly what's happening. A 50-minute top. We're getting a bit of a retracement. and then the next break would be the breakout trade. This recent red candle is indeed the bounce. Yes. Could be the bounce for more upside, right? Or I'm not sure how you mean that, in fact, but it is being respected. This is what I was waiting for the Kiwi, indeed. A good close, but then a retrace before taking the breakout to the upside. Jan was asking for the New Zealand Swissy. Let's take a look. I have to admit that it's not a currency I have looked so far for a while. I haven't looked at it at least since probably on Wednesday, so, or maybe even Tuesday. Pretty strong impulse, but it's back to the long-term moving averages, and you can see it's a bit of a triangle right now. So that is either a potential breakout here, or this was a retracement for more downside. It is at a break or bounce spot. At the moment, the break to the upside would be with the trend. If you look at the 15. Now we would need to break above this 50-minute fractal. The break to the downside would be a bit more riskier from this 50-minute perspective because it's still counter trend on the 15 at least, and the 1 hour. But from the 4-hour perspective, this upside could be a retracement of this downside. And for that to happen, we would probably need a break below the 4-hour support. So that's probably what I would be looking for. If I would be looking at this New Zealand Swiss, a break below the 4-hour support or a break above the 4-hour resistance for one of the two breakout trades probably. So I hope that makes sense. Yeah, that looks like the best breakout levels, I would say. But that was just a quick look. But would make the most sense. Although if we break to the downside here, I wouldn't say there's any rush in jumping in. I would think that because it's still a counter trend break in a way, looking at this 15-minute world, a hook back, there's a high chance, let me say there's a high probability of a hook back happening here. So interesting break or bounce spot there. All right, folks, that wraps it up, I guess, for today. Euro dollar, yes, we can take a look. Euro dollar, I'm looking at a break above this personally, this level, and then I wouldn't be surprised for the currency to move up to the next resistance, which should be the 78.6, or at least so far we've respected the 38.2, the 50, and the 618. So that would be my target. But I'm not that, yeah, we were looking at this morning, this was a bounce off the bottom of the trend line, not a breakout. The breakout would be, in my opinion, still above the top here. And then we should have space up to the 78.6, which is at 137.15. The other possibility, for me to trade it earlier than breaking this top, we would need to see this band turn to the upside. I need at least an angle here, and then a hook back on the 15 and break. That would be another way. Looking at the last hour's euro-dollar 1 hour candle, it does look like we're getting a bullish turnaround. This was an impulse bar, different than these candles that were looking corrective. When looking at that corrective price action, more downside seemed likely. With that impulse bar, the equilibrium is changing a bit. I wouldn't necessarily say I'm right here, right now, bullish. But if, depending on how this candle closes, if it's another bullish candle, the moving averages are going to point up. And I would look for any 15-minute bull flag, and the next break could be already a breakout trade. And another breakout trade above there. So that's how I would look at the euro dollar, with 137 as a target then. If we don't get the bullish breakout, which seems likely now looking at the current setup, but I would want to see one more price action confirmation there. Then for example, here we should still see some correction before continuing. If we don't see it, then I would want to see a break below the blue line. But I don't think that, looking at the most recent price action, seems less likely. So 137 is the answer then in that case. If we get that confirmation, what I'm looking for at least. So hope that makes sense. Thanks all for being here. Tomorrow we'll be back. We have a lot of webinars actually this month. So take a look. We have tomorrow breakout trading again. We have, let's see, a webinar, Need versus Greed, with Tarantulan Thursday. And next week we have, let me take a look, oscillator trading. And Thursday the 19th we have a flashback of 2013. And the 2nd of January we have what we can expect in 2014. So take a look. I think there will certainly be some things you like. And Lau, no problem at all. Gladly do that. Not an issue at all. Glad that, thank you all for being here, and then seeing you. I'm looking forward to seeing you in the upcoming webinars as well. Cheers, everyone.
The organizer